Morning, everyone. Just give me a moment. I'll leave you with Cayman. I've just got to grab a delivery. 2 seconds.
Yeah. Hey, good morning, everybody. We're in the advent of the return of our good friend Ryan. Let me start this flow show this Friday, the 20th of June. Flow show in your company. Thanks, everybody, for joining us once more. And let's start with this.
I'm here.
Oh yeah, let's start with the. Was it the Nespresso, Ryan? Because I mean, they just delivered mine, and I was about to tell you they're on their way.
I didn't know you bought me an espresso, mate. I'd rather a crate of wine, but anyway.
I'm having Nespresso every morning, mate.
Yeah, nice, very nice, very nice. Right, shall I crack on then?
Yeah, go ahead, mate.
Cool. Right. Gonna just make you aware once more of our coming soon. That's on there. Let's get that up for you guys in the chat so you know where you're going. Page speaks for itself. Something big is coming. If you want to find out what more or sooner than everyone else, if you want to be able to have first dibs at getting in before everyone else, sign up on the list there. You get our newsletter, you'll get updates. You'll also get entered into a draw for a free $25,000 trader funding program assessment account. So get in there, your easy ticket in to leverage up your trading as long as you fulfill all the assessment rules. So get your name, get your email address in there. It doesn't matter how many times you enter. We only register your email once, so don't try and game the system by putting in your email 50 times. It won't increase your chances. And as always, current subscribers to Forex Analytics will automatically be in that draw as well. Right, let's crack on with the news. I've lost my notes. Where have they gone? There we go. China, they kept their LPR rates unchanged. No real expectation that they were going to change them, but we always keep an eye open in case they do decide to go on a bit of an easing spree again. They kept them unchanged. Bank of Japan's Ueda was out, nothing really of note. He said he expects underlying inflation to gradually heighten after a pause. Says that the price trend is to be in line with their goal in the second half of their outlook, which may suggest that there's a bit longer to go before they look to hike. It obviously added the caveat that if their price outlook is reached, that's when they would look to hike. So it could come sooner. We did get some CPI out of Japan, as you can see there. This is the national numbers and still looking pretty healthy. That core CPI number, 3.7%, up 2 pips over last month and up a pip over expectations. National CPI, though, came in as expected, 3.5. That was down a touch, but still sailing well above 2%, which is good news. It's now, one could say, Kay, that is sustainably above their inflation target.
Totally. The thing is, there's other things at play for the time being in the yen, but just based on that one, they should continue to hike. Ueda, well, still cautious, but kind of said as much. The thing is, what we were discussing as well in our room this morning. So for those who are not yet in our room, there's no time to waste. It is that the Bank of Japan and then that MOF Bank of Japan meeting with participants. I'm sure you will talk about what they did on the bond front. They're just giving the market time to assess, and then somewhere yen is still is not yet a high yielder, although one may argue that the very long term is at levels comparable to some other countries, but in the short term we're still not there yet. And I am afraid for yen that giving the market that time, the market is probably not going to want to be very long yen and waiting and paying away pips every day, because the funding will still bite in the short term.
Yeah, absolutely. And Yeah, we got, as you mentioned, we got to the details of what they're doing in bonds. A little bit of surprise there. So they're going to cut the 30 and 40-year bond issuance by 100 billion each per auction, which was pretty much on the money. But they decided they're going to be cutting the 20-year by 200 billion instead of 100 billion per auction. That was double what the market was expecting. It's not really a big deal in the grand scheme of things. And obviously they can adjust it as they see fit. But we then had this meeting, or that's probably come as a result of the meeting with bond market participants, in which they said they're not denying the possibility of considering bond buybacks of some existing JGBs. That was something that was will they, won't they? However, they said that they're not in the process of implementing buybacks right now, and they'll need to consider various impacts or various factors if such a step is decided. They said, or some people said within this meeting, that the buyback will hurt the autonomy of the market. And they also heard views asking about the 20-year bond issue cut. So it looks like they may have had some influence from that. The overall response was that dealers largely agreed with the MOF bond plan. Not much for the NK. It's all just ticking a box on the numbers and whatever, no shocks. And then we go from this point forward.
Yeah. I wonder who were the market participants who pushed for lower bond issuance in the 20-year. I don't know if we are going to get any details of that, but it wouldn't come as a surprise if that was a government official or representative being there. But it does also, the interesting thing here, and again, it doesn't have any like real immediate implication for yen or so, but asking about that and pointing at the potential derailing of that long and ultra long bond market, it just doesn't just tell me that even though Ueda was so clear at the start of what was it, start of 2024 or even before, that those things were going to happen, like hiking rates and that is a bit surprising, because it just shows that the market is so slow to adapt to anything that may be happening in Japan, because the market just doesn't have the habit that something real is happening in Japan, especially not on the hiking side.
Yeah, it's very much a reaction function. You know, in other countries, you know, if central banks changing policy, you get the front running of that policy change. But I think, given the way Japan moves, and that you can never be sure that they are going to follow through. I mean, look how long it's taken them to do the hike so far. Yeah, it's more a case, I think the market wants to see it first, then react,
Yeah,
rather than get in front of it.
yeah, probably, yeah.
Yeah. On the trade front, Japan's Akazawa says there's no timeline set for a trade deal while negotiations continue. I don't know if this is a translation thing, but he commented saying that they will examine what prevented reaching a deal. So it looks like there was a deal and now there's not a deal, or there was big complications to a deal. He said that the July 9th date is not a deadline for Japan-US trade talks, which follows on from what the US side have been saying, that anyone who's negotiating in good faith could get a can kick on that deadline. So Japan's probably going to get a can kick on that one. Moving over to down underland, Australia, and this might be one of the reasons why we've seen the Aussie dollar versus US dollar holding up so well, because apparently Australian funds have been cutting their US Treasury holdings on Trump's policy stuff. Now, this isn't a headlines out. They've only started yesterday. They would have been doing this for a while. Hence why it might explain why various pairs have been supported, or currencies have been supported, like Aussie dollar sitting in this very, 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 very tight range after these initial moves. So they probably, if they were getting out of US assets, this would have been probably where they're doing it. But any bits and pieces they want to keep doing, shifting flows out of or investments out, maybe out of US into Europe, that sort of thing, then this might be why it's supported.
Yeah, that's exactly what happened. Well, there was an article a couple of weeks back. One of the major Australian asset managers was already he already said, or they the CFO already said that they were already in that process as well. I think this is just a catch up on the rest of the Australian money managers front.
Yeah, the rest of the sheep following.
Yeah,
But yeah, but it doesn't mean that they're all, going back into Aussie dollar. They could have been
no,
shifting out of US into Europe, which means, that's another reason
exactly.
why euro dollar stays bid. So it's not all one currency related. But
That's exactly what that money manager said in those days, that he saw opportunities in, well, they saw opportunities in Europe and also in the UK actually.
yeah, yeah. So now we may have a round peg for the round hole rather than the square peg for the round hole. But anyway, that's that. ECB's Nagel says bringing inflation to target is the best thing the ECB can do for growth. Bank of England, they held rates as expected at 4.25. As we were saying on the show yesterday, look for a more dovish tilt. We got that in the vote instead of the 7.2 expected. We got a 6.3. Those three all voting for a 25 pip cut, so no big ones from Dingra and the like. The members who voted for cuts said that there was a material further loosening in the labour market. There's been subdued consumer demand, and that pay deals are near sustainable rates. That was the reason why they wanted a cut. August has been circled on the calendar for when the bank next cut. That's an 80% chance, was an 80% chance after the meeting yesterday. We didn't hear from Bailey. He was too busy swimming across the sea to Ukraine for a speech today. But we did get Lombardelli out saying that they're finding events in the Middle East deeply worrying, and the BOE is carefully assessing the events. Says there's a broad weakening in the labour market, but the labour market is evolving as was forecast in May. The UK magic money tree has just been harvested again. It must have had a bumper harvest because apparently we've found 725 billion to spend on infrastructure over the next 10 years, which I shudder at because that all sounds good, but I want to know how much it's going to cost me first. It's probably going to cost me 724 billion to pay for it. So anyway, we've magicked this money out of thin air from somewhere, 9 billion a year or something they want to spend. Good luck with that. Well, they're not going to get much on the tax receipt front from VAT and that sort of thing, particularly when retail sales came in shockingly lower. You can see the numbers there, a lot of red. Headline sales were expected to fall 0.5%, but they fell 2.7% instead year on year, going negative. Core retail sales down 2.8% year on year, down 1.3%. Now, you would have thought normally you'd see the pound getting a caning on those sorts of numbers, but everyone's really been expecting it. We've had these were May data. We've had January, February, March, and April all showing positive retail numbers, which was the surprise originally. So this is not really a surprise that we've seen a bit of a washout in these numbers. Again, further to the Treasury wanting to spunk this 725 billion. They haven't been helped by borrowing having to go up 17.69 billion. Not as much as expected, but still a chunky number. Just to give you a bit of insight into what happened with the tax rise, the national insurance rise, that saw those tax receipts of just under 11 billion, which was up 22% versus a year ago. And it's the biggest May rise since 2021. I haven't looked into whether that was something that's higher or lower than expected, but at least that's come through now. So all the national insurance stuff should wash out in data moving forward. On the trade front, European officials are apparently coming round to the fact that they will have to pay a 10% baseline rate on tariffs in any US-EU trade deal. That's according to sources spoken to by Reuters. This is something that was coming up earlier in the week, that they might get something along the same lines as the UK. Right, all this Iran stuff as well. So yesterday we were speaking, I mentioned on the show about the al-Bashir plant and how Russia has got a lot of people working there. Well, a headline popped up saying that the Israeli military, from an Israeli military spokesman, said that they struck the sites in Bashir and some others. That got Russia coming out. They must have been watching the news headlines rather than getting actual sources on the ground, because they urged Israel to immediately halt air attacks on the Bashir plant. But then Israel came out and said it was a mistake that they included Bashir in saying it was hit. So there's a bit of intelligence gaps going on there if Russia are just reading headlines instead of finding out what's going on. But anyway, that Bashir plant hasn't been hit, apparently. The Iraqi Hezbollah lot have threatened to target US bases and close the Strait of Hormuz if the US joins in strikes on Iran. This is the first big threat we've had about the Strait of Hormuz, which is a big pinch point for trade. This is going to inject again some weekend risk for what happens over there. Now, White House Press Secretary Leavitt says on Trump's Iran decision that he will decide within the next 2 weeks over what he's going to do. That doesn't really reduce any risk of something that may happen over the weekend. So it's still on the table that the US may get involved, and that is what the market is keeping an eye on at this moment. We've had the what's been coined by my good friend Alex on Twitter, the League of Losers. That's your France, UK, Germany, EU bods meeting with Iran today in Geneva to try and get some sort of deal. They've come up short, no shock there, because Iran's basically saying there's going to be no diplomacy until all aggression is stopped. So that League of Losers can go back to being a coalition of wombats on the other thing. Everyone wants to be spending on defence, except for Spain, who want an exemption from NATO's 5% spending target. Meanwhile, Italy is having a moan up because they say, and this is from the Econ Ministry, saying activating the EU clause allowing for extra deficit for higher defence spending would prevent Italy from exiting their EU deficit procedure. Now, this is a thing where your deficit is too high and you get put on the naughty step by the EU, and then you have to get your economy in such a way that you can exit that deficit procedure. But they're saying, well, if they go spending on defence, they won't exit it, and they want to exit it. So who fucking knows? Kate, the usual shite from Europe. They can't get anything done, can't agree anything, and don't want to spend it when they have to spend it.
Yeah, I was just looking at an article in Bloomberg who was talking about this after the Spanish reaction. There's a number of countries who are running far behind, on spending. Spain is one already. Italy is another one, and then the lowest one on spending in percentage of GDP is my home country, Belgium. They're only spending, I think, 1.2% or so of their GDP on defense. Of course, it's been like a few decades that we actually got rid of our army, purely and simple, the active ones at least. Yeah, it's going to be a European thing again. The bigger countries, well, Spain is a big one as well, but I mean the core are going to have to use all their diplomacy, or in European terms, maybe sponsor the other ones to get their spending up. At least we can see it coming large that there are going to be relaxation of rules coming in regards to those to the deficit limits.
Yeah, absolutely. They'll move the goalposts like they always do. No point having rules if you can't move them. Right, what else? That's about it, I think. Unless you got anything else, Kay?
No, not not really. I was just looking quickly through the. No, nothing market moving. It's mainly that US delay that set the wheels in motion last night in the US in an empty market as well. Yeah, now we are back ahead of the weekend, waiting what's going to hit us next. Oh, yes, one thing, and I don't know if you mentioned it. China said that they were going to have military drills in the South China Sea this weekend. So if it quiets down a bit on the one hand, on the one side, they make sure that the tension remains where it should be.
Yeah, and yeah, and there was I did see that, but there was also a headline. Apparently, Japanese naval ships got buzzed by Chinese warplanes, so they decided to go and for a little sail through the strait between Taiwan and China. So yeah, that's all. They like to do these little drills and escapades. I think they do it monthly nowadays, but yeah, who knows? And there's just been a headline popping up from Macron saying his League of Losers are going to present a proposal to Iran today. Watch that get short shrift, I think. But, you know, never say never. If Iran accepts something before the weekend, we could see a bit of a risk rally on the back of that. And then obviously Trump will come in and claim the win for himself anyway later on. So still could go either way. But if there's no deals on Iran by the close or coming into the close, then expect to see, you know, a bit of risk wearing, positioning, hedging, whatever, into the weekend, just in case something happens. So know your risk. Today we've not got an awful lot. We've got the Philly Fed out and some PPI retails data from Canada, and that's about it. So a pretty quiet end to the week on the data front anyway. So it's just going to be truth bombs and everything else that drops on us as well. Right, where should we go? Where should we go? Where should we go? Lucky dip, Aussie dollar. That's where we're at. Had a decent test of the 64, 40, 45 line over yesterday's fix level I've been looking at closely. I actually added to my longs down here. So I'm now long an average of, what is it? About 64-ish, something like that. We're back above this 64, 80, 85 area, trying to hold it for now. If we manage that, we might get around up to here. I'm not expecting any gangbusters. I'm not expecting any range breaks to happen unless they're headline driven. So maybe we get a little mooch up to the 65s or something. Otherwise, I'm happy to sit in this position to see which way it goes. But if we're breaking under this little area of traffic, you know, maybe take it down even to 64s, then maybe something is changing. But we've still got this range, 100 pips, 64.40, 110 pips, 65.50. Trade the edges and wait for the breaks for this one. Dollar yen not doing an awful lot. We are looking short-term bullish still because we are holding above this 145 still. So we could be heading up towards 146. We had half attempt yesterday, but it's still on this higher lows and just nicking out higher highs. So we're still motoring up. We're still in the middle of this wider 142s, 148s range. Okay, so longer term, we've got different things going on at the moment. Kay, still, is it still with the yen or still with the dollar on this one?
Yen. I think yen, mate. You look at the yen crosses; they are finding dips, bits on dips. Sorry. Yeah, that one in particular, the euro yen is trading higher. I think it has to do with what we were talking about those Australian money managers putting some money into Europe. I've been talking about that very often. We have been talking about the ECBers being okay with money flowing into the euro, and that seems what the market is doing right now. So I think it's more of a yen thing than a dollar thing. This dollar yen really. And as I said, I mean the Bank of Japan MOF, even if the Bank of Japan is still on the hiking path, they're still only at 0.5%, right? And they've given us like or they are telling the market that there's 1.5 months to pass now before the next decision is made on rate hikes. I expect the market to start to speculate a week before the Bank of Japan next meeting that they could do so. But in the meantime, let's say there's a month where unless risk completely drops away, it may be the case that the yen is continuing to find some sellers, or at least not too many buyers. Let's put it that way.
Yeah, it's quite a narrow one at the moment, but we are struggling to get through this cloud and hold a move above the top of this cloud.
Yeah,
And
mm,
the bottom of that is right down in the bottom of my zone. So there's plenty of confluence if you want to
mm.
try trading the ranges. But if
Yeah,
you start moving out, that's when you get the next direction.
yeah. The thing is that the dollar yen is always the biggest instrument, and it's the instrument that's mostly used as well to do the crosses. So if those yen crosses continue to move a bit higher, dollar yen is going to get a bid, and then all of a sudden, despite the rest not moving a lot, you can find dollar yen back at 146 or so. But I do think in itself, the dollar yen is seemingly fairly valued. And if you look at the overall picture, a bit of the as you are or there on the global picture, we've done highs, lows, drops down, then sharp rebound, then another drop, and it seems that we continuously try to come back to this 145-ish level.
Yeah,
In yen, you don't put 145 the figure as a level on there, right? It's 144.80 to 145 and a half or so, but we are constantly coming back to that level, which really looks to be the balance of things. When nothing too much happen, we tend to gravitate back to 145. No.
yeah, very much so. It's a level, like you say, we keep coming back to. But if you look at this, we don't at the moment. This is going all the way back. 2023. We don't stay below it for that long. Okay,
No.
you can call it a couple of months, but compared to how often we stay, how long we stay above it, these moves below it don't tend to last too long. So it gives you the overall direction, which we know is
Yeah.
still in a longer term uptrend.
Yeah, as I was saying in the room, no later than this morning, I can't buy it for the time being. No, not the dollar yen. I can't buy yen for the time being. I can't.
Yeah,
It just gives that feeling that all of a sudden we may be like 1% lower in yen terms, huh? It just gives that feeling because it's when you see like all the risk, negative risk that's been thrown onto it, and you find yourself back, and then I'm looking back at the euro yen, if you can pull that one up, and you find yourself back at 167. That's not a bearish market. Huh?
yeah, absolutely. But you can always use this fib level as well because it is a prior level, as you can see in
Yeah,
there.
yeah,
So it needs, if it holds above this level, let's say we get a close today. Let's just come in a bit shorter. If we get a close today above this level, that will look very bearish, very bullish.
yeah. And then you have your red line under there. No, the white line. Sorry, in a more medium term, I think if it drops back under 165, it's lights out.
Yeah, that all 50, which is again a level on its own as well. So nice clear levels for that one at least. Not too much noise if you want to keep a clean chart, which is always good. Where else shall we go from here? Have a look at Euro Sterling quickly. Again, the first thing I looked at was the reaction to all that data, and there pretty much wasn't one, not in the grand scheme of things. So this one's still looking bullish. It's particularly bullish above 85.20 in this zone here. So unless we're chugging back into there and looking like breaking it, this has got every chance of moving back higher. But we might be in a position where we need a new catalyst to get us moving that way. So maybe, again, risk headlines are going to be the one that drag it, depending on who's moving faster, whether it's cable or euro dollar. But fundamental wise, there's really not much to trade either side. Europe's not going all guns blazing, and neither's the UK. Sorry, mate.
Yeah, and that replies Ali's comment there on his position. But I think as Ryan says, I think we lost a bit of impetus on the euro sterling. We thought it was going to creep higher. It does remain big, but it's not making any new ground, right? So it just points at just a slower market.
Yeah, it's done 200 odd pips in a couple of weeks, which that's no small beans for this pair sometimes. But then you end up going into sideways mode where it just does that for a couple of months. But Ali, okay, where are you? You're at 41. Okay, right on the level, pretty much. I assume you're trading against that 100 moving average there. Okie doke. Yeah, you need it. You need it getting back above this 45, 50 area and holding above there. But if you're going to move up towards where you take profit, 71.80. Yeah, maybe, but you're not getting anything unless you get above here. So if you get another failure round about here, and if it was my trade, I'll be taking a little slice off just to protect in case it didn't continue motoring up. But again, I think if we close today above 50, you've probably got a good chance of getting a move up to 70, and then we get into the next traffic zone into this 61.8 fib of this move, 85.90s. Right, I'm going to look at dollar mex quickly, and then I'll pass it over to you, mate, because this one is playing nicely-ish. Oh, why has it all gone wobbly there? With the techs, we're still in this bearish mood. This 19 is still needing to be watched as a pivot. We had this move up 1910s. It got to near 12s, as it often wants to do. You get these little spikes, but good enough, it's held. So that's confirmed the top side level, which is still just a short-term number. It does go back to some old prior lows way back, but we've had 1, 2, 3 taps now, and it's held, so it's building up. But if we stay above this 19 level, and again, where we close today could be a decider, that might give it the platform for another move back up a bit higher. Whether it can get up to 19, 24, 25 is another question. If we continue just to wash around the level, come below, go above, come below, that would potentially mean that we are headed for further downside, or at least a test of those lows down here. So a bit on the fence right here at this 19 level for now. You can take your direction whichever way we hold on. Right, mate, I'm going to ping it over to you. Find the right menu. There you go.
Okay, where am I? Oh, I'm here. Okay. First of all, those reactions in the metals that we had. Just going back on a shorter term one, it's really reaction to risk. This gold right now. Yes, it's bouncing a bit, and the dollar is a little bit more on the defensive, shall we say, as well today. But it's still doing sort of what it has to do on risk without really falling out of bed, this gold, and it continuously finds support around that 33.40 zone around here. This is your intraday level. Look, I'm not going to exclude that we're gonna have that we might see a bit of a drop off, but it's probably not going to happen ahead of the weekend, because the weekend is usually a period now where we have to be really careful with risk. So potentially not going to drop too much further. Not too much reason to start to ramp higher again. 33.70, bit of the hinge of the day, I guess, but I don't think there's enough strength to even potentially reach 3400 unless we do have an adverse geopolitical line. This support line, this red line, is slowly coming into view. Obviously, it's a rising trend line. It is over time coming to the market, so it's perhaps less important than when it was stuck around 3100 here. But just make a note of it. That's somewhere in the 32s, the mid 32s. We're also not too far from that prior low here. So anywhere 32 and a half or so, it's around 32.65. But I would rather give it a bit of leeway. It's gold as well. It doesn't really move. Uh, Half a buck it can move $5-10 at a time. So, but this zone of importance is gradually moving up, at least in the shorter term. Then I would start to pay attention if gold would reach this zone here. There, I think it should either find really solid support or something changed on the risk front, and we get a lot better risk in the markets. Yes, the dollar will probably get sold on it, but the hedge against all bad things in the world may not be needed to be that strong anymore for now. In the short term, I say. So we could have over time a bit of a test of that level. I'm just not ruling it out. Okay, I'm not too interested in jumping into many things gold, and we had an interesting move here in silver. Let's first go back on. I was showing this 36 25 30, and we broken through, but then the timing of it was a bit strange because I don't find a real headline as such on on the wires, but it happened at the same time as the Nikkei got hit, and so I guess we had a bit of get me out of here move on silver. But if we look at the longer term, you know that big zone here, just above 35, around 35, just below 35, is a huge support zone right now. It did not reach there, so it didn't give me an entry to enter back to what I sold on the way up. I think around here of my call long. So I couldn't get the re-entry, but this is still like the major support. Okay, in silver, we're back above 36. I think a bit neutral here. Yeah, I think for to get into the weekend, it's just going to be a range, but this looks to be a bit of a violent move. I need to dig in perhaps to what exactly happened there. The rest of the currencies, euro dollar is coming back. We know the drill now. If the news is about US going into Iran, people want to buy dollars. If there is a delay, as was announced yesterday, people get rid of those dollars. Don't get sucked into short-term noise, I would say. We're in a bit of a range, but I think we're going to stick to that range, 114.70, 115.70 perhaps, over the course of the afternoon. If there's still some long dollars in there who want to get out of their positions before the weekend, 115.30, 115, the figure, the nearest ones. Could see a little bit of an acceleration if we break either side, but I'm not sure that the Philly Fed it has the power to create bigger waves. What is interesting though is that in this correction, retracement activity, with that addition in U.S. uncertainty into Iran, we have left the major support zone here untested. Okay, and this is low 114s, and I think this is where perhaps the hammer will hit the anvil. If that would break one day, then we can see an acceleration. Until then, I would still say that overall the trend for a bit higher euro hasn't really changed. Cable was an interesting one. It got poured a lot of crap over its head, but it held the 50% of this rally that we saw.
Lost you.
Yeah, am I back?
Yeah. Yep.
I saw all of a sudden. So it was interesting, this hold at around the 50% in the cable. We are back already above 134.40. this is kind of interesting, and this brings us back what we were saying about the euro sterling. This move back up in the sterling at a moment where we saw pretty crappy data is perhaps telling that the sterling is not out of the game yet, on the cable side at least. I still argue that the euro could stay but a bit, but cable is bouncing. And that was an interesting hold here around 133.85. If ever we get a test back down there, pay close attention to what's happening. 135.15, it's gradually crawling back up to the level. If we get above there, we could see a bit of an acceleration, I think. But until then, respect that level equally, because it was a low here, traded around here. So it's been a bit of a crossroad, yeah, for the short-term cable. So have a close look at what's happening at 135.15 if we should get there. What else, guys? Anyone else put something on there? Not really. Yeah, you missed your long entry Dolly in yesterday, but it was all but obvious. I mean, so much going on in the yen process, Ali. I'm not going to say too much about the Dolly yen myself right now. Um, Oil, yeah, Hannah, oil. It is it is moving on the Middle East, right? It is moving on the Middle East. But what we have to look at, even though we had those big spikes and we had a big move that we saw unfold, and I'm going on the daily, okay? This is a longer term chart because it is moving a couple of bucks at the time. I would we had this spike here, but look where it stopped. We stopped around the 88.6 of the latest dump. If you look at it in the longer term, look at those highs. They are still lower. Okay, this is still what if I'm looking at the text on gold without considering what is happening on the ground, the highs are still lower. Okay. Yes, we did have a big rebound. Actually, I said it if it moves above 65, be careful because then we could go higher. We spoke about it on Face Show. We spoke about it in our room as well. If you're not in our room, it's probably time to join. But we stopped there. We also broke above this trend line in the meantime. We stopped there, and now we are struggling again to go or to hold above 75. I think 75, 75 and a half, Hannah, this is really where you want to be careful if we get back above there, okay? Um, Not on a Friday, because we never know what's going to happen on the weekend. But once the weekend is over, it's probably um, more worth looking at this level. Does it have to do with the cap? In certain ways, but I think what is more also important is takeaway wars, which of course are an oil glutton. But take away the wars, the global consumption is going down. Demand is going down, and at the same time, OPEC and OPEC Plus are increasing their output again. So yes, you see those spikes, and then I'm coming back to what happened here. This is when Russia went into invaded Ukraine. You get those spikes, but then every time we get those spikes, very violent spikes even, every time we get those spikes, we have a tendency to come back down because the underlying situation, what's going on besides all wars, is not one of huge demand in oil right now either. And we are expecting extremely hot summers again. Think about climate change. That's not really bullish oil either. But that's the really big scheme of things. If it really blows up in the Middle East, if they start to close the Strait of Hormuz, this thing is probably going to go to $80 anyway. But some people even say that we can go back to $100. I still want to see it. I still want to see it happen. But this is like the top side going on. On the downside, it's equally holding now the low 70s. It's 70-90, okay, but or 70-40, okay, but I think just look at the psychological 70 level. If it goes back below 70, it's probably going to go down. But therefore, it's maybe and likely, in my opinion, also too early because the situation in the Middle East is not resolved at all. Okay, so that's a bit my view on what is going on oil right now. Lastly,
Whoa, Mr. Lastly. Hang on a second.
what?
Hang on a second. I'm getting it out. I get told off for talking about Elliott waves and DXY on shows. You just talked about climate change, mate,
Oh,
on the Flow show. There you go.
did I?
Got a card for you. Let me take your name and number. Put in
I,
your little pad.
I could ask. I could be at the ECB because there's always a climate change question and the last question at the ECB presser. I'm so
Not on
sorry.
this show, mate. Not on this show.
You know what? You know what? I think it's really overheating outside in the UK here. I'm starting to suffer from the heat. Okay, last one to show. Dollar Swiss. Yeah, it's broken that line ahead actually of the S&P, but it stopped at the 38.2, and now we are already back at the 23.6. A bit of an indecision around here. But okay, the dollar came back down. I think we are neutral again on the dollar Swiss, but watch out if we get a close below 81.5 on the week, especially to start the week next week. Okay, for the rest, rangy stuff here. Euro Swiss is creeping up. I'm not even going to show it, just not to jinx my position. Back over to you, Ryan, and I'm extremely sorry. I acknowledge my huge mistake.
I'm going to put it down to heat stroke, mate, since we had 3 days of sunshine. So, yeah, you're on a yellow. That's as far as we need to go. No VAR involvement. Thank you very much, mate, as always, for all your wonderful stuff this week. And thank you, everyone else, for coming to the Flow Show as well. Do have a wonderful weekend. Stay safe, and we'll see you all on Monday.